A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. Hope you're doing well. Had a crazy kind of 24-hour period here in the stock market. Markets in general. We have dollar index up here today, or not really up, but just holding its gains from yesterday, which was sort of a question I had for the dollar index was, okay, you've got this big push up to the 100 level. What happens from here? ADP numbers just dropped, so we'll take a quick look at that, see how that is potentially impacting markets. Dollar index pretty unchanged for now. Okay, ADP numbers came in better than expected. Stronger jobs reported numbers. And you have to remember, guys, that in a time right now where essentially we are operating off of less data than usual, this ADP number, which does still matter anyways, I mean, these are real impacts on the economy. It matters more right now because we're in a lull in terms of new economic data. So ADP numbers have been shining through recently with some stronger than anticipated jobs numbers. So that's definitely welcomed by the market. Dollar is maintaining some strength here. Gold prices are up this morning, though. I was looking at my gold short position here, trying to figure out what the next step is. I mean, I'm just going to let the trade play out. If it rips through these highs, this at this point will be a really small loss for me. And if we can drop lower, like if this ADP number and really it's going to be around the SPMIs that come out later, services PMIs, that will be probably your big mover for the day. What's up, Belant? Good to see you, my friend. Thanks for being here. No one cares about the ADP report. A lot of people do care about the ADP numbers. In fact, they were sort of leading the NFP numbers this year. So, for example, if I go take a look at labor statistics, they have been leading the NFP numbers to a degree, like missing expectations for some time. So if we're actually now seeing a little bit of an uptick, it's possible that you're starting to possibly see a little bit of a slowdown in terms of a slowdown in the slowdown, if you will, right? It's possible that we see a little bit of an uptick in jobs data happening, which again would be very much welcomed by the market. Actually, I don't know if it would. Now that I think about it, I don't know that stronger jobs numbers would necessarily be too welcomed by the market, because the market also does not like news about less rate cuts. Regardless, let's just take a quick look at the stock market here as a whole. S&P 500 yesterday had a little bit of a tumble, and actually overnight session we traded lower, pushed back up. We'll see what happens here. If I mean, so far you have a major level of support looking left on the S&P 500 and the NASDAQ. I'm still long NAS. We did get pretty close to getting, actually I got much closer in my Russell trade to almost getting stopped out. And if this breaks through support, then I'm out of this trade. Like, I'm going to call it good. Russell's not behaved the way that I had hoped it to do. But we'll see if it can turn around here, if we can start pushing higher. Again, still in the NAS trade. This one has performed really well, but I do need it to hold support here. So we tested let me see. We've tested all three of the areas that we discussed in yesterday's content. If you're here on the stream yesterday, we talked about 3 levels, 3 critical areas in the short term for the NASDAQ to potentially hold. Here's the thing, right? We have The first one tested, sellers took control, right? Look at what we did yesterday. If you want to talk about short-term price action, bears did a pretty good job yesterday. Check this out. We came down to this key area of support where we gapped open, right? So we gapped up, buyers rushed in, pushed prices higher. We went around back and forth a little while, came down to this area and immediately found buyers. The issue was they weren't able to actually hold any gains, and we pushed lower, officially filling the gap that was left open. Now, the reason that was a big deal was because I also pointed out yesterday that the next area of support that I'd be looking at would be the 38.2% retracement level, which also lines up nicely with where this gap opened from. Okay, so we tested that area and sellers went right through it. And then I mentioned in yesterday's video that sort of that last level in the short-term support zones. I mean, longer term, you have some still higher time frame uptrends that I think bulls would try and hold on to. But on like the 4-hour chart, this is your last kind of major area of obvious support, which is the prior all-time high. And prior all-time highs are always kind of key notable areas of support. Just like all-time lows would be, or prior all-time lows would be major resistance points. So anyways, we come down to this area, didn't quite get to the 50% retracement zone, but seemingly are trying to, and we will see, keyword trying, we are trying to hold this area of support this morning. If, and this, by the way, this happened overnight, you had a pretty strong bounce around this area of support on the NASDAQ. That was that 25,200 level that we discussed in yesterday's video. Seems like it's holding for now. We'll see though. If you get, and this is just, let me make sure also, does my mic sound okay? I always have to check this at home because sometimes my mic defaults to the wrong one. Let me just double check. Yep, we should be good. What I was going to say is that basically from here with the NASDAQ, if we break through this low, then I'm going to go ahead and call it good on my trade, take profits on it. And this will still have been, even after giving back, if I give back this profit and take profits on the trade at this point, still a very, very solid trade. And we're on to the next one. With that said, again, this is the spot. If we're going to see bulls step up in the short run, my personal view here would be we should see them here. If you're going to see them, they should probably hold this area. That's my opinion. Nick, the bow is starting to tighten on Bitcoin side as well. The lower it goes, the stronger the appetite gets. I've started my entries from the key zones. But yeah, I'm feeling both irritated but also grateful with what happened on Bitcoin. So I stopped out yesterday on my Bitcoin trade, and price just after I stopped out. I mean, I took a loss, but it was not a very big loss. And then price proceeded to kind of drop like a rock here. So we'll see. But you do have some, to your point, Belen, you have some solid longer term areas that are now starting to get tested on Bitcoin. So we've been consolidating, though. It just depends what your trading style is. If you're, I think, Belen, you're a little bit more long term natured with your Bitcoin stuff, and so you've got major areas of support here, as well as around like the 94,000 if we do go that low. But yeah, we'll see. I don't have enough of a bias to stay. Sorry, there's a spider web in my room. That's creepy. I don't have enough of a conviction, I don't think, to stay with Bitcoin. Let me look. So if I search up Bitcoin, yeah, some of the shorter term trend stuff, we lost a lot of the moving averages too. I think if you're a believer in Bitcoin, I asked on my Twitter yesterday, I said, for the crypto crew, what's going on? And is this likely to, is this a dip you buy? And the crypto crowd, obviously the answer is always yes. But I'm curious to see what happens with it. I trade Bitcoin. I'm not really a crypto. I'm not a hater by any means of cryptocurrency, but I'm also not like a buy and hold, best place to park your money kind of person either. Like I trade Bitcoin. I trade That's pretty much the only one that I trade. I trade Ethereum and Bitcoin. That's it. But I am curious, from a bigger picture perspective, I'm curious to see what we do at this area. So we'll see. Gold here is up this morning, so we bounced back. I've got to stop on my trade if we cannot. Basically, with my trade, it's not a long-term trade. It's not like a weekly chart. It's not a higher time frame, long-term downtrend on gold. I basically have at this point a really small risk to the trade. I'll lose in the hundreds of dollars, which I know that's not nothing, but on my account it's very small. And the concept being, if we break through this level, I'm not married to the trade. It's just a trade, and I'll be on to the next one. But if we can hold this area, right? If we can hold this area and go lower, the key spots that I'm watching on gold price right now would be a push through these prior lows on the 4-hour chart, and anything closing below 3,900 to me would suggest, okay, you've got some real nice bearish momentum continuing on gold. And at a 3,900 level break, I think it's much more likely that you are going to see this kind of move play out. So that's what I'm in the trade for. But again, not married to it. If we can't hold resistance, I'll just take the quick loss. NASDAQ has almost fully recovered its losses here. That's pretty crazy. Let me also just take a look at something here this morning. Take a look at our top setups. I think this thinned out a little bit here recently. We've got a little less setups. Oh, never mind. More currencies. Okay. We got stuff to do this morning. That's good. Okay, so if you're newer to the show, what I'm looking at is the top setups page. Top setups page within the Edge Finder just looks at sentiment readings, technical readings, and economic data, and gives a general read on currency pairs, commodities, indices, etc. So I've been long the NASDAQ. Part of the reason was that Edge Finder had a really nice bullish confluence here. At the time that I took that trade, we were hitting a support level, all the right technicals, all the right sentiment readings were very bearish at that time. Technical readings as well looked good. Seasonality looks really good, by the way. That's part of the technical score. Seasonality looks really good into November. So we'll see. But let's we talked about indices already. Let's see what else we can find on the list. We have Aussie New Zealand dollar as a bullish rating. We have pound CAD, pound Swiss, pound Aussie, and pound yen. So we have a lot of British. I want to look further at the pound pairs because you've got a lot of pound pairs showing up. Let's just really quick look at the pound dollar. And this thing is just melting away, man. This thing completely, it lost all of its moving averages. Its next level of support, its next level of obvious support that I see is a move down to 1.29 or a move down to 1.27, let's call it. But this thing is in true sell-off mode here. We'll see. My thought process was like, if you were going to get a bounce, you probably would have seen it here. But we'll see. We'll see. ADP is good. Why is gold higher? ADP was good. It was a beat. Dollar index kind of holding its gains, not moved very much since ADP. But remember, gold and dollar are not one-to-one. It's not dollar up, gold down, dollar down, gold up. They don't move exactly like that all the time. Gold is sort of gold versus fiat currencies as a collective, not necessarily, even though it's gold versus US dollar, it's really gold prices move off of geopolitical uncertainty, central bank direction, not just in the US, but globally. You know, even though it's gold versus US dollar, XAU USD, if the Bank of England comes out and says, hey, we're gonna hike interest rates, there's no British pound in this equation, yet gold would certainly move, right? If the Bank of England started hiking interest rates, that would put bearish pressure on gold because, again, higher interest rates, not so great for gold. Part of the reason gold's rallied so much in recent years has been a trend amongst central banks to cutting interest rates, right? So I don't think the Bank of England is going to do that. I'm just giving you an example. The Russell trade we're trying to stay head above water here. I almost stopped out on this trade. Turned around here, at least at support for now. This area has been a pretty good area for the bulls so far. If we cannot hold it, though, I need to get out of the trade. So that's my RTY or my IWM trade. We'll see. So we will see. Silver's up 1.5% this morning. Nice little bounce back for silver. US oil, pretty much unchanged. Natural gas, copper, Bitcoin. Here's a look at let's look at the crypto stuff a little closer here. So Bitcoin, my thought process from a trading perspective was, let's see if we can hold this area. At the time, Edgefinder gave a bullish reading. I went long. It did not work out. On to the next. A lot of that stuff yesterday got really, really hit hard. Ethereum was down over 12% at one point. Has bounced back a little bit here. Solana, Doge, Cardano, XRP. I just track this stuff just from a lot of the audience does care about these things. I mean, crypto, the altcoin world has gotten just destroyed in recent years from my understanding of it. Again, I don't really follow that stuff really closely, but the people that I do follow on it pointed out it's been a rough period. Let's take a look at some majors. Looking at Euro US dollar. I don't think I don't really have anything strong on the major currency pairs this time. Euro dollar looks like it's heading back down to support. Support, I'd say, is 114 for now, but you broke through this level. Bulls just can't seem to put anything together with the euro, pound, etc. We'll see. Maybe that will change. Dollar yen continues to push higher. This thing looks like it's, again, if momentum favors it, if momentum keeps going, we're probably headed to 158. Again, I thought this was resistance, and that was not the case. We kept going. So we'll see. But dollar yen looks really strong here. Dollar Swiss franc. I closed profits on this one yesterday. Had a long position on this one. Coming into some longer term resistance. This thing's been in a really long-term, strong downtrend. We'll see if that can start to break formation, start moving higher. Dollar CAD looks incredible. I know Marco from our team is I think he's still long dollar CAD. Doing really well with dollar CAD, which is awesome. Really awesome. In terms of trades that I am in, let's just take a look. So I am still going through index trades. I'm still long US 2000, which is the Russell. I'm still long NASDAQ. I'm short gold. I closed out of my Bitcoin trade. Forex wise, I am out of dollar Swiss. I have Euro pound shorts, Aussie Kiwi shorts, and CAD Swiss longs. And stocks, I have a ton of stuff just open. I've recently been buying some defensive names like General Mills, Comcast. Not a lot, but just a little bit of these things, nibbling on some defensive stuff just to see what we can get going there. But I do still have those things in play. So we'll see what happens with that next. Also, let me just make a quick plug here too. We just kicked off this week our 45% off Black Friday sale. If you are interested in picking up access to the signals room that I just showed or the Edge Finder, here's how you can get access. For a limited time, like I said, it's our Black Friday sale, but we do it all month so that we can give people a chance to, if you need to like pay for it in a payment plan, or if you need to get money together, whatever. If you want to join us, if you've been thinking about it, I know a lot of people who watch our stuff have wanted a copy of the Edge Finder, have been waiting for a chance. Here it is. The Edge Finder is currently 45% off. The way to do that, or to get that sale, is just to send us a direct message or scan the QR code that you see below my camera here. What that will do is it will connect you to a real person on our team. And that link will take you, I'll show you what that looks like. When you click that link, it'll take you to our live chat spot. Just hit whichever thing you're interested in, and it will connect you to a real person. So once you put your name in, it's not an AI robot. It is a real person from our staff. Just let them know you were watching the stream, you're interested in the Black Friday pricing, and they can get you all the details. They can also set you up with a payment plan. We've had a lot of people who are interested in Edge Finder, but just need to split it into like 2 payments or 3 payments. And so if that's something that's easier for you, if that's something, just don't miss the sale prices, because every year what happens is people are like, oh, I missed it. Can I get it? And it's like, you got to wait. So take advantage of it while it is there. Don't miss the low prices while they're there. If you want a copy of Edge Finder or VIP group, there is how you can get access. Chinese stocks, Nikkei, Dow Jones, NASDAQ, you've still got a pretty good list of risk on assets. Yesterday, we looked at Chinese stocks. How did those do yesterday? They actually did okay. Held support, at least so far here. Chinese stocks around this area of support we talked about yesterday seem to be holding. We'll see what happens there. Guys, we're going to bring into the conversation my friend Chris Pulver to take a look at markets with me here. Whenever James has got him switched in, we'll bring him into the call here. See what he's watching. What's up, Chris? How are you, man?
What's happening? Good morning.
Good morning. What's the latest, Chris? We had a sell-off yesterday. NASDAQ,
Yep.
S&P 500, a little bit of overnight action to the downside. What are you doing with this market?
Actually, last night I jumped online around 10 p.m. Eastern time and started looking at the futures market because I want to see how cheap it is to get some hedges out there. I don't know. I mean, I've got hedges out to December. Probably won't pay me because they're so low. I've got hedges out to April, June, and December of next year.
Mm-hmm.
But it just doesn't sit well with me when, a day like yesterday, it's like, the market's down from high to low. We're down, I don't know, just over 2%. And I've seen about a 1% sell off in my portfolio. I know a lot of it's options, a lot of it's volatility. We've seen the VIX go from, 16, 17 to 19. My next question is, are we going to see a VIX that's back up into the mid 20s again? We had that 24 to 29 VIX. And then we had a pretty hard fade as we hit all-time highs again. But I didn't like the price action as we hit all-time highs to not see market breadth go with it. So that's the one thing that's been my concern. And I don't think the market necessarily rolls over, but I don't know. We've talked about it before. It's like the natural contrarian side is like, this is the perfect time for the market to have like a bigger weakness window than people expect or people want. You just kind of assume that the market's going to be steady through the end of the year. I don't know. I think Powell kind of threw the market off a little bit by saying that there's no guarantee we're going to cut in December, even though I think they will. Probability is still very high, like 66% or something like that.
Yeah.
But anyway, I think it just hit me yesterday. I'm like, I'm just going to take a little bit more caution, add like a lot of the prices I was looking at yesterday for futures, I can get like a 10 to 1, 15 to 1. Not as good. I mean, honestly, when I've got a lot of my hedges in, I'm getting like 20 to 30 to 1, just because volatility is much lower. So it's funny when you're looking at hedging when the VIX is 19, premiums are a lot more expensive.
Yeah.
So anyway, I took a position yesterday in Pulver Alerts. I added a little campaign trade on Tesla. I like it, but I also expect there to be some volatility along the way. So Tesla, dropped about $10 or so from my entry. I got it around 457, and right now it's pre 449. So not too bad. It'll be down a few $100, but I put in a 250 and a $200 long put, and then I bought shares and put a 470 call. So even if price just stays above, my break even is going to be like 363. So that's not a bad spot to say, hey, I'm going to own some shares of Tesla at 363. That's not bad. But if we go higher, I'm forfeiting the upside with at least this chunk of shares, but I still get 21% return on my investment, which for a allocation of 100 shares is not too bad. And I've got protection, and I don't know. I just think we're silly to ignore some of the fragility in the market. I think we're silly to ignore the concentration and all the high valuations, and everyone's saying it's different this time. I get it. I see why the market would not roll over, but I think you're silly if you're just like, you didn't see this coming. I mean, we've been so cautious this whole year that I hate feeling like I'm ill prepared for the market to roll over like another 10% if it does.
Chris,
So,
I've got
cautious.
in terms of market breadth, I know you like your participation rate. One thing I've got here too is our market breadth indicator too. We've got the 20, the 50, and the 100-day moving averages here on the stocks that we track within Stockbox. And what's interesting is like recently, it's interesting to see like stock market at all-time high, and then you have very low participation of stocks above their 20-day moving average. So even though, the index level, due to the very large, Mag 7 stocks, is performing quite well, you also have at the same time very low participation in the number of stocks. So for listeners,
Right.
when we're talking about market breadth, what we're talking about is like, okay, you have the stock market. Look at that, NASDAQ back to break even on the day. S&P 500, like when we're looking at the S&P 500, that is a collection of 500 companies, but it's really a small concentration of the names that have been really carrying the index because it is not equally weighted. Just because you have 500 companies in there does not mean that, they're equally weighted. So like an Amazon or an Apple, they are a very large chunk of the poll, since they're much bigger companies than, for example, like a Delta Airlines or a Home Depot or something like that. So just something to think about is the participation rate has been pretty garbage here recently. It's been pretty terrible amongst non-Mag 7 companies, and specifically like not Mag 7 plus AI names. Like you've got, some of the more hypey AI related stuff. It's an interesting market because, again, does it tell you that the market, is it a timing tool that's really accurate? I would say probably not. But from a bull market kind of longevity standpoint, almost certainly we would prefer to see a large amount of stocks participating, right? If the market is really healthy, you should have most companies really prospering. And it's not that they're doing horrible. It's just that they're not, this kind of move does not feel very accurate to reflect the average company in the stock market.
Right. And all-time highs being made by literally your, top 5, top 10. I mean, if you want to get a kind of a barometer of the market, take a look at mags. So we're just off all-time highs. Just take like a, snapshot of this mentally, because this was kind of the I'm not going to say blow off move, because that's nothing, but the way the price behaved from like a Friday to Monday, Monday to Tuesday, Tuesday to Wednesday, then we had the Fed. All that price action was really inefficient along the way. So we had, all-time highs again, literally led by a heat map that showed like 60+% of stocks declining. We have less than 50% of the S&P above a 50-day moving average. And so, but mags, of course, is your, Mag 7. So went to all-time highs. Take a look at mags compared to SMH.
Yep.
Very similar price action. SMH pulling back a little bit more. Palantir yesterday had a pretty big sell-off. I'm not sure if Palantir is, I don't think it's an SMH space, but certainly in the high flyer, big gainers year. It's still up like over 100% for the year. It's just, it had a pretty reasonable pullback, even after beating earnings. SMH, then you look at your SPY, very similar price action, same type of gap and inefficiency, pulling back a little bit. We are just around the 21 period as of yesterday's price action. We're up above slightly on the day, which is interesting. Like, again, take a look at this, futures, I guess, just turned positive. I was watching this pretty much all night. And, last night it was like 0.6 to the downside. Then it was 0.2, 0.3. Now it's positive 0.7. So we're actually looking at a pre-market a little bit higher. QQQ, same thing, inefficient move up, starting to roll over, a couple of moving averages. I've talked about this now for a few weeks. As we got really close to that one-day sell-off on October 10th, and we didn't quite hit the 50-day moving average, that's still been a near-term correction level for me. So I think even right now, if all we did is have like let's say today is like a stabilizer day, we might pull back and kind of test this gap from, this would have been from Monday to Tuesday. If we test that gap area but fail, I still think we have more short-term retracement to the downside. 50 period, I think it's hit. This has been the uptrend all year. The 21 period's held several times, probably like 7, 8, 9 times. The 50 period has not been touched since we closed above it in May. So at least that is where I think the prices have to come back and find. I think that's like a safe kind of bounce for the markets. I will be concerned if we see an aggressive push back below the October 10th low. That October 10th candle, if we take that out, I'm a little bit more concerned with the next move being something like this. If we test or take out the October 10th candle, then we have a dead cat bounce and we sell off again. That's my concern.
I think, with this market too, Chris, it's kind of like, it feels like right before you had the DeepSeek scare, if you remember that, what was kind of interesting is like, everything is so untouchable. There's nothing that could possibly touch this market. And all of a sudden it's like one freak kind of AI challenging thought process enters the market, and it can send the market into a head spin really, really quick.
Yeah.
That again, I've been on a little bit of a campaign here recently of just like rotating my own portfolio. I know we've talked about this before, but I talked about this going into 2025. I said, if we continue to melt up, and by the way, for listeners, we've got a upcoming webinar where we're going to be talking about our top setups for 2026. And it really, for me, it's like a really big once a year kind of presentation that we do that's really critical on kind of prepping for the week ahead or the year ahead. Maybe James, if we could try and find that link to share with people in the chat, that'd be awesome. I'm not sure if you have that, but point is, in 2025, cautiously bullish was my perception going into 2025. We've had a lot more bullishness than I even thought we would. We had downside move and then just kind of flow to the upside. But here's the thing is, in my 2024 presentation, I mentioned that if we get a third year in a row where it's just pretty much a melt up, I would start to continue to rotate into more defensive stuff. So I'm not short the market. I'm not bearish the market. I'm not trying to call a top on the market, but I have been buying things like dividend stocks. I've been buying things like TLT. I've been raising cash. I've had a really good year. I've had a good couple of years. And I think it's a practical, rational, prudent thing to do to take some chips off the table and to rotate a little bit. So that's kind of where I'm postured. I still think, again, bull markets can go on for 5 years, 6 years, 7 years. So I'm not saying like, oh yeah, year 3, it's done from here. Actually, the average bull market, I think, is like 5 years. So we could have upside. I just think that you, as a portfolio, managing your own portfolio, managing your own accounts, you have a choice. You don't have to be 10 out of 10 all in long, long AI names, long cryptocurrencies. Like, you don't have to go to that extreme. My opinion would be that could actually be way more risky than people are even aware of.
Yeah. It's not something that's what I'm saying. I'm going to put in probably an inexpensive hedge that offers, 10 to 1, 15 to 1. I'm long volatility still until April. So the one thing that this does remind me of is this like very slow, methodical melt up is a lot like if you exclude kind of the Liberation Day noisy window from like March and April. Let's just say you exclude that, which I know that was a big part of why this market was reflexive this year. The melt up since the bottom of April felt a lot like 2017. The market just did not want to go down. Every like literally a quarter percent pullback, 0.5% pullback, 1% pullback was by the dip, and the market finished higher almost every single month. We take a look at the monthly. Here's SPX monthly. Other than a giant wick in April, November is finally starting out with like the only red candle we have seen the entire year. So I know that it's November 5th. Typically November is a reasonable bullish month. Like November, December is pretty strong to finish out the year, but there's that long candle I talked about in April. It's all wick to the downside. And then powerhouse May, June, July, August, September. September was the big surprise to me, having a huge rally in September. And again, I'm trying to lean on some of the statistics that if September is pushing to fresh highs for the year, like 90% of the time, 91% of the time, the markets finish higher for the year. So I don't see us doing too much damage, but November is going to have some fight in it because it's certainly off to a rough start for what is arguably a pretty bullish month.
Yeah.
So, but we need to pull back. I mean, I've said that for weeks, and it's like we get it, but what I don't like is when we get the pullback and it's like, my gosh, you've got only 40% of stocks above a 50-day moving average. You have so many stocks in like correction mode. You have basically, I want to say it's like 30 to 40% of all of the gains this year in the S&P have been because of Mag 7. But that's also because they're $3, $4, $5 trillion companies, and it's price weighted. You look at the Dow. I mean, the Dow's still 30 companies. It's priced out to be the same thing, the same way. Like, it's still a big wick in April. Every month it is up. I mean, November's down a little bit, but take a look at the daily. I mean, it's still pretty well supported. I mean, I would be worried about the Dow here, Nick, if we were at 450, which would be the all-time highs. If we're right back to it and it's like, oh no, do we have a double top? No, we've gone through it. Like, we've gone through it. Russell has hit all-time highs. So I don't know. I mean, maybe a little choppy here at the all-time highs, but I wouldn't say that technically this is a double top. I would think that if anything, I actually look left on this chart. resistance, there's no such thing as a triple top. We talked about this in silver. Silver had a triple top and it blew through it and went to fresh all-time highs.
Right.
So anyway, I think we need a little bit of a cleansing. I don't think that the constant barrage of, government shutdown and no news and what's going on, and the Fed just didn't really do us any favors by saying that we're going to be data dependent and there's no guarantee we're going to have a rate cut, even though the Fed watch tool didn't freaking change.
Right.
If I go to the watch tool, it's still like 66%. And I'm pretty sure it's 68%. Like, this tool has never been wrong since, like, I think 09 was like a big flip from Bernanke back in 09. Other than that, this tool has been spot on with that, that kind of forced Fed transparency. So I don't know. We'll see if this all of a sudden is growing in the next couple of weeks, Nick, to like 40-50% on the pause side. Then I'll believe that we have an indecisive, Fed coming into December. But
yeah, it's a good way
until
of thinking
then,
about it.
It's a pretty good probability we still get the edge and get that. It would be September, October, December. That'd be the third cut this year.
So Chris, what we're looking at while you're talking about the rate cut stuff, what's your thoughts on the dollar and precious metals? I'm curious what you think about that. Dollar has had a really impressive run up here. I mean, we're back up into triple digits. Dollar's pushing here this morning, some stronger than expected ADP numbers. Fed, again, slightly more hawkish than anticipated from Powell. Maybe that doesn't change too much about December, but I guess the next question would be, well, does that change something for, path in 2026? So what is your thoughts on dollar, precious metals? Do you have any positions on it? Are you looking for positions?
Precious metals, yes. Dollar index, no. I didn't get long UUP. I was long the dollar shortly after FOMC in currencies. I'm actually a little surprised that with the dollar strength we have seen, that this correction in the stock market didn't come sooner, because that was one thing I was talking about as far as correlation, is that if we see a stronger push in the dollar, I expected the stock market to roll over a little bit. And, again, we had a big sell off on October 10th. We went right back to all-time highs. We're rolling over a little bit now, over 2% or so, but we're still close to all-time highs, while the dollar itself has rallied 4% off the lows. The S&P is only down 2%. So I just, it's interesting now, like, is now the weakness in the equities market because we're getting some risk off flows in the dollar. Yesterday was a pretty crazy currency day. So here's today's currency strength versus yesterday. Japanese yen, very strong. So again, a tone of risk off trading yesterday. You don't see it. What we haven't seen in currencies this year is lots and lots of, massive volatility. Give me a window this year that we've seen 300-400 pip moves. It's been like the prime minister, the surprise prime minister vote in Japan, which was just a couple weeks ago. And I can't tell you another day that was, other than Liberation Day, when currencies were nuts for a couple of weeks. But other than that, it's been very tight trading. So today we're kind of back to normal, like pretty choppy, pretty baseline. But dollar, to me, technically on the daily, we're coming back into some nice resistance areas. I'm not ready to short this thing. My suggestion to short, if we're going to short the dollar, would be wait for some confirmation, because this has been a very crowded trade. Everyone's talking about the Trump administration so bearish on the dollar, so weak for the dollar, secular bear market for the dollar. That makes me think that the surprise could be if we get back to this level where this wedge started. That's around 102. Okay, if we get to 102 and it doesn't turn, that might be, again, stronger dollar. It's the surprise, like unwinding, it's covering, it's squeezing, right, all the shorts, and that might be sustained pain, or at least pullback in the equities market. How that behaves with bonds, how that behaves with yields, remains to be seen. But I don't know. I know you were long UUP. If you're still in it, that's great. It's working out awesome.
I took profits on it.
Did you? Okay.
And just also really quick, if James, we could show my screen for a second. Check this out. So COT data history, just to add what you said about the crowded trade to the dollar. So dollar shorts have been a really popular trade, but I'm so curious when the government shutdown ends, and please, can they just figure that stuff out? How are you going to waste
14?
Our money?
They failed a 14th time for fun for
like, just figure out how you're going to waste our money and get back to it. So, anyways, I wanted to follow up just with a visual to what you said about dollar's been a crowded short trade. So institutions and many investors, not just U.S. institutions but internationally, foreign money flowing out of the dollar into gold, into other currencies. That has been a really popular trade. One of the big things, Chris, that I've been thinking about with the dollar is, first of all, we're in the blind with COT data. So we don't know what institutions this is. We're looking at old data here. This is going, the latest we have, or most recent we have, is September 26th. So we are out of sync with the COT data. But before that change, we had a lot of bearishness in the US dollar. The dollar was still kind of in that secular downtrend. We've recently, during this quiet zone, we've had a surge in dollar price action. And we have had a lot of geopolitical headlines that I think kind of at least neutral out some of the obvious bearishness that was the first half of the year, right? First half of the year, no one knew anything about what was going on with the trade dynamics, and everybody assumed the worst. It likely, as markets tend to do, probably overshot. People got really scared about stuff, and we've seen kind of now this, I'm not saying it necessarily ends perfect for the US. I'm just saying that fear, that worst fear, oh, US is going to be an isolationist country, doesn't seem to have materialized. And so we see the dollar trade, in my opinion, maybe kind of undoing some of that sell-off that we saw in the first half of the year. And that's currencies 101. They don't tend to trend for forever in one direction. They tend to go back and forth.
Yeah, and that's, I mean, it was a really stubborn start. I mean, if you look at the dollar index from like 2022, 2023, like that swing was just as aggressive. And I mean, in fact, we did hit the symmetry. If you can see my chart, the DXY swing matched the bottoms almost perfectly. So here's the symmetry I'm talking about. So you look at this high to low, look at this high to low, and you get this lower high to lower low. So when it bottomed, that was symmetry. So I like I said, I think that the bears, I mean, there's plenty of support in here that can become resistance. I think that's a key level. If the bears are going to take control, or this market's going to stabilize, then we see the dollar turn around like the 100 handle, 101 handle, 102 handle. But if we clear 102 and there's no break of this near-term trend, it's like if we just break into open space here, this dollar can eat into this sell-off. So we go high, low. Let's say we pull back 50%. Well, that's a lot higher level. And I think most people that are bears on the dollar want to see it go. Yeah. And so I think they will cease to be bears if we're up to like 103, 104 on the dollar.
Right.
So a couple ways to look at it, but stronger dollar probably doesn't look good for equities. One thing that's not changing a ton, even though we've had rate cuts and we're probably going to be C3 for the year, we're not seeing yields going down. I mean, when we know this, like the Fed does not control the long end of the curve. We started to cut in September, and this is where the rate cut started to happen. September, I think 17th, correct me if I'm wrong, FOMC, something like that. But that window, we're literally the same. We've cut rates twice, due to cut a third time, and we have not gone anywhere. Now, it's better than the reaction that we saw back in 2024 when cutting 100 basis points went up 100 basis points. But having the long end of the curve go nowhere, I do think this is also the exhaustion of like, we can't get lower rates on anything right now. So, refinancing is still expensive. Mortgages are still over 6%. Median home price is still high. It's like we still have all the things that are not making life cheaper. I guess it was a soundbite yesterday, but Trump said, "What inflation? Grocery prices are lower." I beg to differ, my friend. Like I went to get, and this is baby food, but I got like a little puree thing for my kid that usually is like $2.50 per packet. It was $3.29, and it's like, is there a sale? Is there a buy one get one? Nope. So $3.29. Let's see, minus $2.50, 79 out of a $2.50 normal. It's like that's a 30% increase.
Yeah.
On like baby food. It's like, well, I'm not going to not feed my kid. I'm not going to feed him garbage. So it's just like, that's a big increase. And that's at the grocery store. And this is where people feel it the most, grocery and gas. Yep. So pay at the pump prices. We've had some like low threes at pay at the pump on the AAA gas prices, but grocery stores are ridiculous. They're ridiculous every single time you go. It's like, I don't know. I kind of want to steal stuff. Just kidding. Anyway,
we got on the record, everyone. But CPI, again, you are dealing with the concept of prices going down. Just as that always like is the instant way to trigger me is when people are like, grocery store prices are coming down, or gas, like anything where prices don't go down unless you have like massive recession.
Exactly.
Historically, you don't get prices going down. Now, inflation can slow.
You can have wages go up. You can have inflation, so wages go up, and it feels like, oh, things are better. But it's like you're never going to see prices go down.
Right.
And so our inflation path of 3%, like you're showing there on the edge fund, you go back to the screen. I mean, are we going to see another round of inflation in November? Is it on the calendar? I mean, from to my knowledge, I don't see the government's coming back in anytime soon. I read like after Black Friday. So it's like, are we literally going to go through Thanksgiving holidays and not have a government? And I just, again, I don't know. Is it true last night? Did Mandani win the mayoral election in New York?
He did. Yep.
Oh, okay.
Don't worry, man. Things are going to get better. He's gonna save us.
I don't know how New York is going to pay for this. And what it's going to be is it's going to be probably the biggest fight between federal and state, because all these things are going to be demanded. This guy, ran a campaign on helping people and giving people a lift from the bottom up. But the federal government's like, no, we'll just never fund New York ever again. Like that's how ridiculously like polarizing the administration can be to now this like separation of like far left and far right. Like, again,
yeah, things are just getting,
to be political. It's just that's
like
where people are struggling, and they feel like, what can they turn to? I've got to vote different. This is not working for me. I've got to vote differently. Feeling like that's the only voice they have, and that's a big swing though, man, because that's a platform that is, where you're talking state controlled prices and co-ops, and it's like these things don't exist. I heard Tom Sosnoff on Tasty Live rant about it many times, and he's not, he's obviously like a capitalist guy, but he cares about fairness. I mean, he just left Tasty Live and is now running his own thing on wage fairness and inequality. So the guy's
really, well, I was going to say, I've been trying to find where he went.
Yeah. So he, I think it starts November 10th. I think it's starting pretty soon, but it's Lost Dog and One Lucky Dog. So it's going to be a combination of a app and platform, as well as a like live show. And they're building out, basically they're going to build out like a wage fairness app, where when you put in your resume, plug in some data points, they can tell you what you're worth in the market. And so that way it's, if you're job seeking, seeking wages, what to ask. So it's kind of like a consulting thing. It's also just providing a picture that, people are worth more than probably what they're making. Because, and I just talked to a buddy of mine that's a financial advisor. He worked for Northwestern Mutual for a lot of years. Now he's a Voya, but interesting. He was just doing a little bit of a deep dive, and it's almost like right now, everyone has a side hustle. And in order to just maintain a standard of living, you have to maintain that side hustle, or you have to have some extra cash flow because normal wages aren't cutting it. So you got to trade, you got to pick up this, you got to do something in the evenings, you got to do something online, you got to, maybe use AI and leverage something. Yep. People are like scrapping to figure out how else to keep some extra revenue coming in just to maintain a standard of living. And I think now that's like expected. You have like the extra 1099 to go with your taxes for the year. I don't know. It's crazy, really different, man. So we went from like gig economy to now gig plus economy, where it's like you have to have more than one gig. You have to have more than one revenue stream.
Yeah, for sure. I mean, it's a crazy thing. The world's changing, that's for sure. Anyways, guys, we're out of time. We got our next show host taking over here in just a second, and Chris, you got to run as well, I believe. Okay. So before we get kicked out, Chris and I, just remember, if you are not already, take advantage of our Black Friday discounts. You can get access to everything currently 45% off discount right now. That includes my trade alerts, Chris's trade alerts. You can also get access to Edge Finder. You can bundle them all together. We've had a lot of people picking up Pulver alerts with their Edge Finder or whatever. I mean, everything is super discounted right now. So if you're interested in taking that next step, joining us inside of our VIP group, trading with us, all of our trade alerts get sent to you. You can access to a copy of the Edge Finder. If you're looking to take that next step, now is the time. Take advantage. Everything is 45% off. Use that link that you see down below, or the QR code that is scannable right above my head there. Chris, thanks for coming on, man. We'll see you next time.
Sounds good.
See you guys.
Everybody.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole
whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. Hope you're having a great Wednesday. So in terms of the markets, what has been happening in the markets? Well, I had some developments. I closed some trades. I have some trades running in some pretty healthy profit, which I will show you right now. Maybe I can expand this a bit so that it's a bit bigger, a bit easier to see. And I will be doing a DNA funded 25K one phase challenge. So if you want to participate in that, if you want to get the free challenge, stay tuned. In 10 to 15 minutes, I will be pasting the code here in my trading view. So yeah, stay alert, stay tuned, and let's get into the stream. So this is my watch list. The NASDAQ has dropped heavily, but has now kind of recovered. Gold and silver are actually up on the day. Euro GBP is pushing higher, but to be honest, so I told you I'm looking for buy setups on Euro GBP, but I've kind of changed my mind. So I don't think it looks that great in terms of the fundamentals. Yes, the pound is very weak, but the euro seems to be kind of getting weaker as well. So the main theme for, let's say, 2025 for Q1 and Q2 was dollar is losing strength. Let's get into euro. So let's find alternatives to the dollar. Well, I personally think that narrative is kind of gone. You had also a lot of spending of money going into the German defense, let's say. So German companies, German defense, that is also kind of done now. So the DXY has, I would say, recovered, pushing higher, gaining more strength. It has crushed the 100 mark level. So I believe kind of that whole euro will replace the dollar story has been exhausted. So for that reason, I believe the euro is not such a strong currency, and I'm not looking to buy Euro GBP. I'm maybe looking to sell GBP USD. That may be a bit more high probability. If we check on the fundamental, I wish I held this, but that's okay. So if we check on the fundamentals for the euro, let's see. Okay, most of the stuff is coming out actually bullish than better than expected, but most of it is neutral. Interesting to see. So coming out the same as the forecast. Long-term numbers are good. So long-term numbers for the euro are good. I just think the narrative, the fundamentals are not as powerful for the euro as they used to be. So UJ, I did manually close yesterday for like a 0.95% gain. So really happy with the trade, but maybe I should have held this. I'm kind of worried. We're approaching the intervention zone. We're kind of slowing down on UJ. The yen may be gaining a bit more strength, a bit more than expected. Let me see the JXY. So the JXY is actually negative on the day. Interesting to see. But yeah, UJ, I'm out, closed it. This was a signal in the A1 Discord. So if you're in the Discord, you would be notified about all of this. And if you want to get in the Discord, we're running a massive sale. So I think it's 45% off with my code MARKO. So if you want to get in, if you want to get a massive discount, you can do so with my discount code. Yeah, UJ is done. Seems to be continuing higher, seems to be bullish on the day. So we'll see if maybe I should have held this. But I kind of looked at it. I looked at all of the data. Also, Nick, he went from being bullish on the dollar to a bit more neutral, which kind of fits the same narrative as I'm personally seeing. I think the dollar may actually be a bit So may actually be a bit overextended. So it may be due for a pullback here on the XY, maybe back to the 20 MA, because it just looks super bullish. It looks super strong, looks super bullish. I think a bit of a correction, a bit of a pullback could happen. Now, I have my USD CAD trade still running. This one is a monster. So this one looks absolutely bullish, looks absolutely great. Again, USD, I still like as a currency. I still think there's more upside. For the CAD, I still think it is a sort of a bearish currency and high probability to sell. I think it's relative to other currencies, CAD is the worst currency because it's producing the worst data. I'm not focusing just on the short term, but we can take a look at the short term here. Let's see. Short term looks great, actually. So short term looks great, but then the long term is pretty problematic. Long term, so GDP all over the place. See, then you have the unemployment for the CAD, which is 7.1%. That is absolutely massive. So would you like to live in Canada with 7.1 unemployment rate? I don't think so. Would you like to invest into Canada with falling housing prices? I don't think so either. And CPI, inflation is actually at 2.4%. So inflation seems elevated. 2.4%, above target, above 2%. Not a lot of room to cut interest rates. Remember the mechanics. Cutting interest rates leads to a lower currency, leads to a lower currency leads to higher inflation, leads to stimulating the growth. So if you want growth, you have high inflation. If you want a lower inflation, you have bad growth. Well, Canada is facing bad growth, high unemployment, and high inflation. See, inflation above target. So inflation at 2.4%. That is called stagflation. And stagflation is never bullish for the currency. So this is the long-term data. I think investors, hedge fund managers, pension fund managers, big banks, they're finally starting to realize how bearish the CAD is, and they're starting to sell it. So Euro CAD is also up on the day. Interesting. Let me see CAD yen. Let's see CAD yen. Okay, CAD yen not doing much right there, but again, USD CAD just looks very bullish, very how would you say it, impulsive. I'm looking to trail my stop loss, so I'm looking for this. Okay, that is what I'm looking for, and then I'll just be trailing my stop loss if we do continue going higher. Right? Sorry about that. I don't have a clear take profit. I was thinking of maybe prematurely closing this, so closing this with a manual close and then getting in once again during a pullback. So once we get a pullback, but I think it's just best to let it run. So there's quite a free area here where we can just explode to the upside. You have this high right here. And I mean, until we reach that high, it's pretty much a straight shot to the upside. So there's no clear, let's see. Yeah, there's no clear resistance. Only resistance is here at 1.44. So I think if I just trail my stop loss, it's gonna be a good trade. EuroCAD, I closed as well. So yesterday I closed it for a bit of a loss. This position just wasn't performing well. So this position was just being break even, just ranging around in drawdown, negative swaps as well. So if you want to check on the edge finder here, EuroCAD, sell, see. So if you buy, you're going to pay negative swaps. If you sell, you should in theory get paid positive swaps. But if you buy, you're going to be paying swaps every single day as you keep holding the position. So EuroCAD, negative swaps, didn't do much, didn't move a lot. So it was in drawdown most of the time, running around break even. It was actually here, it was looking impulsive, but then it crashed all the way back down. So yeah, essentially I decided to just cut this position, be out of this trade, and focus on something else, because every single position takes a bit of bandwidth, so mental bandwidth to let's say control, to monitor, right? So every single position is extra work. But if I can cut a couple of positions that haven't really moved and I can focus that energy on new positions, on new research, well, that might be a good proposition, okay? So yeah, that's what I'm watching. That's what I'm trying to see on the EuroCAD. Or not trying to see, that's just what I did on EuroCAD. The only trade I'm in right now is USD CAD. Only one. So yeah. Now let me check the comments. Quite a lot of comments. Let's see. Hey Sluggy. Reagan says, hi sir, please the Dow put call ratio analysis. Let me see. So if I can bring it. Put to call, Dow. Here it is. So right now we are, I would say, near high call volume. So kind of not in the bullish sentiment territory, but approaching that. Okay, so this is it basically. Slaughtering the cat. Yes. Max. Hey, what's up, Max? Samuel, what's up? Ball out. Hello. Gold is crushing. Well, is it crushing? I'm not sure which time frames you guys are trading, but it doesn't seem to be crushing. It seems just to be flat in the last couple of days, at least on the daily. I mean, if you go to the 5 minute, it's not even crushing on the 5 minutes. So gold right now looks to be done with the sell-off and possibly time to go up. But I'm personally waiting for a bullish reading from the Edge Finder. Are we supposed to paste the code? Yes, so just you're going to see the code I have on the screen and you need to input it into the DNA funded website. Slugs has won already. I thought you had a broken keyboard. How are you winning? You have a hotkeys keyboard. The codes don't have you letter. Okay. The new code, let me see if it has a... Okay, it doesn't have a U. Let's see. What about selling GJ? I think you, Nick, wearing... I'm not sure what that means. If I don't win the giveaway, I will just buy it. So if you guys want to buy a challenge, you can get 25% off with A1 Live. If you just want to get a DNA funded challenge, expand your trading capital, you can just use our discount code A1 Live. Okay? GJ, you still have the Citron Saxo? No, I sold it yesterday. I sold it yesterday, actually. Thank God I sold it. I got a very good price. Gold is flipping bullish. We're going to see. How is your Edge Finder giving a neutral reading? Well, Nick has been talking bears since last week. Yeah, so for me in top setups, if I look at gold, neutral, silver, neutral. Okay, so what I would like to see is I would like to see a bullish bias on gold, on silver, and then I would look for buy setups on these things. So I think this is a good price. I think the pullback is nice. We got sort of an ABC correction. So A, B, C, and I think that is high probability. That looks pretty healthy. Okay. I just need a confirmation. I'm not going to go in and blindly buy if the fundamentals are neutral, maybe even a bit bearish, because I know Nick is selling gold, if I'm not mistaken. So that's kind of a contrarian signal. Usually I want to do a similar thing that Nick does because he's looking at the edge finder. He has extensive knowledge, and I know he's most of the time on the right side of the markets. So I usually try to kind of follow what Nick is doing. So I do my own thing and I kind of follow Nick. If Nick is selling gold, I'm not gonna be a buyer. Okay, I'm gonna wait until he stopped out, but don't tell him. Just kidding. I'm gonna wait for an edge finder reading to be bullish. So when I see gold become bullish, I will be looking for buy setups. Let me see the seasonality. What is the seasonality like? Monthly. Let's see, gold. Actually bullish in November and December. Interesting. Not so bullish, but kind of bullish. Silver. I love watching the seasonality, by the way. It's so interesting. You guys said GJ, so I'll check GJ and then we're gonna do the giveaway. GBP, JPY. So the gap has been closed almost. I mean, we had a gap on Monday, back on the 6th of October. Now it is beginning to close. Usually, especially in Forex, if any gaps print, they get closed in the upcoming few days or the upcoming few weeks. That is what you can see here. So we are pretty much going to close the gap. We just need a bit more downside. If you're wondering my personal opinion on GJ, it is technically in an uptrend, but I'm super bearish on the pound. So I'm super bearish on the CAD. I'm super bearish on the pound. I have actually, as you know, I have a USD CAD buy, and I had a couple of, I had a Euro GBP buy, which worked out okay. The swaps were pretty negative. See here. The swaps were pretty problematic, but I definitely want to sell the pound. So GBP JPY is looking like a kind of a neutral thing. Let me see the top setups. Because technicals are in an uptrend, fundamentally, I would like to sell. Oh, actually, we're getting a sell reading. Nice. Okay, that's great. That's good. Just the technicals are not yet looking super bearish. If this thing does start doing this, then maybe I will be more interested to look for sell setups, right? So that is something I'm going to wait for on GJ. Possibly a bit more bearish price action. Now, what you could have done is you could have bet on the gap fill. So as I mentioned, gaps in Forex, they usually get filled pretty quickly. And what you could have done is executed the sell setup because of fundamentals, because of the edge finder, and then had a take profit at the close of the gap. So like this. See? Something like that. That could have been a nice trade. In hindsight, of course, in hindsight. Is Marco trading elite waves? Absolutely not. It is just the way that I expressed the pullback on gold and silver. So I know just a little bit about elite waves. I know that they move up in 5 waves and they go down in 3 waves. So essentially that is what I'm kind of seeing right here. Okay. Now time for the giveaway. Be ready. Be at the screen. Open DNA funded to a 25K 1-phase account. I'm gonna copy and paste the code in my trading view. So let's do it. Copy. New text. Here it is. This is the code. And if anyone does manage to catch this, let me know in the comments because I already sent it to Sluggy. Just kidding. So this is a fresh code, new code. Sluggy hasn't yet used up this one. Maybe he will be the fastest, maybe not. Definitely let me know who won. And by the way, this is the last code. This is the last code that I have. so far. If I get more codes, I'm gonna let you know. But I had 5 codes. We started on Thursday, so it was Thursday, Friday, Monday, Tuesday, Wednesday. So today is the last day. Mihafit has got it. Awesome. Nice. Congratulations. So congratulations on getting a free DNA challenge. Nice. So looks like Sluggy was not the fastest guy this time. So far, I think we got Max, we got Sluggy, and we got Mihafit, if I'm pronouncing that correctly. Hopefully I am. So thank you everyone for tuning in. Thank you everyone for battling it out with these DNA challenges. Now let's continue with the regular program. So funny ass car. Yes, the Citroen Saxo is the most shittiest car you can have. But I got it from my grandpa, and it was like a one-owner car, super low mileage, garage kept, so I got a pretty good price for it. Is USD JPY going bullish? Well, I wouldn't go in right now. So because of that, I did close my position for an okay winner, like 1% winner, something like that, 1R winner. Would I buy right now? Would I buy right here? I'm not sure. I'm not sure I would, because you're starting to approach the intervention level. I kind of thought the price was starting to struggle a bit. I personally think the dollar could be a bit overextended right now. So if you check out the DXY, it kind of looks very, very impulsive. It looks very, very bullish. So I think a bit of a pullback may be due. A bit of a pullback may be on the cards. And that is what I'm expecting on the DXY. So because of that, GXY as well, I'm expecting maybe a bit of an upside, a little bit of upside. They have pretty high inflation. So if we check on the CPI, sorry about that. For the yen, you have pretty high inflation. So 2.9%, that is very, very high. I would kind of expect them to raise interest rates. I'm not sure when. No one knows when, but I'm expecting it's going to happen. I just have a feeling. I've done some research, and from what I've found, they are going to raise rates to battle inflation, right? They do have, as I mentioned, a new prime minister. She is, I think it's Takaishi. She is dovish, so she is not for raising interest rates, but the inflation is a killer. Inflation is a killer. You cannot deny that inflation has been super high, way above the 2% target. So they need to take care of that. They need to raise rates potentially, okay? So I think UJ, not the best play if you want to go long. Not the best play. You're approaching kind of a dangerous area, possible intervention level, possible rate hikes, not the best. Better pairs would be buying USD CAD, selling euro dollar. I think the euro has lost some of its strength. I think the euro is actually starting to become a bit of a bearish pair from all of the story. The euro is going to replace the dollar. Everything is going to go into Europe. The DXY, or sorry, the DAX is going to explode. Well, look what happened. The DAX is super boring. It took 2 of my positions, so I lost two times loser on the DAX. I don't know why I went into the DAX. I kind of got, I made a sucker play, I would say. I would say it wasn't such a bad, I would say it was a pretty bad decision, because looking at the past performance, the DAX has never been great. The DAX was always super crappy. So compare that to the NASDAQ, clear difference. So I think the narrative has shifted from Europe is going to save us. People are going to go into Europe. People are going to buy the DAX. People are going to go from the dollar to the euro. I think it's back to the United States. So I think the narrative is currently the US is the biggest, the baddest, the most expensive, the best stock market in the world. And that is benefiting the NASDAQ, of course, the S&P, the DXY, and euro dollar should go down. Pound dollar especially. So pound dollar, I think it's pretty good to sell, pretty good to go short. Let me check on the Edge Finder top setups. So let's see. GBP USD. Neutral, okay. Maybe if I get a bit more of a bearish reading, neutral as well. But if you want to do something with the dollar, buy USD CAD, sell euro dollar, sell GBP USD. For this last segment, before I give the stage to, I think James is after me, I just want to talk about DNA. So if you want to expand your trading capital, if you want to get more capital, DNA Funded is a great option, reliable prop firm ran by professionals. And the best thing about it is you get a very, very good price compared to other reliable prop firms. There's very few of them, but there are more than one. So I'm not just going to say DNA is the only one. But with our code A1Live, you get 25% off every single challenge, which then makes DNA a no-brainer. Okay. Okay, so I just got a message from James that James can't make it, so we have two Jameses. So I'll go on a bit longer. By the way, this is an update on my DNA Funded challenge. ChatGPT trade signals every single day. I take a signal from ChatGPT, I put it into the markets. This is the equity, current equity, 52,893, 2 trades running, euro dollar sell, looking pretty nice. As I told you, selling euro dollar is a pretty good proposition, and a buy on the SPX. So the buy on the SPX is probably not working out so well, but we are approaching the profit target, which is pretty good to see. So maybe in 1 to 3 months, I can actually pass the phase 1 because I've had a big period of just break-even trading, right? Now we have finally started to try and propel ourselves into the profit target. Anyways, that's it for the plug. If you want to check out DNA, A1Live, 25% off. Now back to the charts. BHESHU, hello, what's up? Toby, what is happening? What do you think about NZD-USD? NZD-USD, yes, sure, let's take a look. NZD-USD. Neutral. Let me check the New Zealand. As far as the recent data goes, okay, we're actually getting bullish recent data, but I would say if I had to pick a direction, I would say sell. So you have a technical downtrend, pretty strong downtrend, pretty large bearish legs. The dollar is pretty strong. The New Zealand is definitely weaker relative to the dollar. So I would say path of least resistance is to sell. Is it the best trade right now? I wouldn't say so. If you want to do something with the dollar, I would say, as I mentioned, buying USD CAD, selling euro dollar, selling GBP USD. I think those are better plays. Okay, just my opinion. So NZD USD, good to sell, but not so high probability as some other options in the markets. Okay, I think that sums things up. Guys, did you watch Trump almost crying? I didn't see it. Can you send me a link? So if you're in the A1 Discord, just send the link in the off topic. I want to see that. But I'm not sure. Did he actually cry? That's pretty funny. Silver is ugly. Looks like the regulars got them all. Yes. So Sluggy, Max, Milfit, all regulars, all part of the A1 Discord. And I promise I did not send them codes in advance. So it was a fair fight. Maybe they have extra strong, extra fast internet connection. Maybe they talked with the producer, with James, to get early access to the stream. I'm not sure, but it was supposed to be a fair fight. So thank you so much for shaking right now. Well, look, use it as an educational tool, right? So use the challenge to learn, to execute, to put in larger positions. And remember, it's demo money. So it's fake money. It's a prop firm. They are behind your trades. So when you make money, they lose money. They pay you out from the failed challenge fees. Keep that in mind. You have to know who your enemy is, essentially, but they are a reliable prop firm and they will honor the agreement. So every single prop firm is behind your trades, but only a few of them will actually pay you out if you make money. Same with the casino. There's a lot of shady casinos, and then you have a couple of let's say reputable ones who will actually pay you out if you win a specific sum of money. I don't know anything about that because I've never won anything in a casino. Maybe I won like 10 or 20 euros, but that's what I've heard and from watching Casino, the movie. So let's see. I too had applied the coupon. I was told I claimed it successfully. Then it loaded and I was kicked out. Well, sorry about that, but yeah, there was a lot of traffic. Currently got a bull entry on gold. I think that's not a bad play, buying gold. I personally would just like a extra confluence, extra confirmation. So Edge Finder, top setups. I would like to see a bullish print right here on gold and silver. So that is essentially what I am personally waiting for, to go in gold, to go in silver. And Nick is short gold, so something I definitely don't want to do is, if I'm unsure of the position and I know Nick is short, going long isn't the best thing to do. If I'm absolutely sure of a position and it's the opposite side of a trade that Nick is in, then okay. But if I'm unsure of a position and I find out that Nick is taking the opposite side, that's an extra confluence for me to not take a buy position. Just because he has a lot of experience, he knows what he's doing, and he knows about good probabilities. So maybe if Nick, unfortunately, gets stopped out, if the price does decide to go a bit higher, and then the Edge Finder prints a bullish signal, then I'll be interested, okay? But since we're getting a neutral reading, since Nick is short, I have absolutely no desire to go and buy gold right now. But if you have some reasons that are telling you to buy, then you must follow the plan. BOJ rate hike in January, yes, I would say so as well. I think there's going to be a rate hike. So I think inflation is super high. Let me see. CPI, super high inflation, 2.9%, above 2%. Trust me, they are feeling the inflation. So they're feeling it in food, in gas, in expenses, general living expenses. They are feeling it and they don't like it. So the Bank of Japan is going to have to raise interest rates to battle this inflation. They just cannot go on with 3% inflation. I don't think it's going to work. Euro can't replace anything. What horrible fiat currency. Germany, France holding up all of the other horrible economies. I would agree with you, ball out. But since I know you're from the US, you're just a Euro hater. So since I'm from Europe, I'm going to be a US hater. Okay. Euro only benefits the horrible EU countries, free lunch. So actually in Croatia, it's awesome for us to be in the European Union because we get a lot of money to build stuff, to repair stuff. But for Germany, France, and other bigger countries, I'm not sure how the proposition of the European Union is positive. I'm not so proficient in the European Union. I just know for Croatia, it's absolutely awesome that we are in the EU. Fun to visit. Yeah, fun to visit. When do you think you guys might be giving out more accounts? This was the last one today. So I had 5 codes. They're gone. Okay. So I've spent all of them. And if there's going to be more codes, I will, of course, let you know. Tune in tomorrow. Maybe Nick will have more codes. Not sure. The competition is getting tough. At this point, it's a sport. Yes, so you definitely need to be super fast. Any thoughts on Aussie Swiss from bottom to the top? Gap is around 50%. Aussie Swiss. Let's see the Aussie Swiss. CHF. So flat. So range bound. I think the Euro Swiss looks a bit better. So there was a trading edge with Euro Swiss where I kind of forecasted the Swiss central bank to go in and start to bid, let's say, against the Swiss to lower export prices. This was the area of support. It kind of worked. I didn't place any real money on the line, but it's an interesting trading edge. And maybe in the future we can revisit revisit this level. So Euro Swiss does look interesting. Aussie Swiss for me just doesn't look interesting at all. It looks super flat. Essentially, the key in Forex is to have one currency that is very strong and the other one that is very weak. If both currencies are strong or both currencies are weak, you're not going to get the trend. So currently, USD CAD is a good option. USD is strong, CAD is weak. USD Yen, I would say, was a pretty good option. USD strong, Yen was pretty weak. Yeah, at the expense of Germany. Yeah, so Germany is basically funding all of us. I'm in gold buys from 3960. Should I close for the news? You have to follow your own plan. I cannot tell you what you should do or not do. You have to stick to your own research, stick to your own backtesting, and follow the plan. If you don't have a plan, I would tell you close it. Yes. So if you don't know what you're doing, absolutely do close the trade and don't open a new one until you create the trading plan, backtest it, and live test it. Okay. Your name ends with IC. Yes, IC Markets. What are some tips on growing accounts below 200, I would say, euros, dollars, pounds? Well, withdraw the money immediately and put it into trading education. Okay. I think you cannot do anything with $200. Really, you cannot do anything. Or buy Nasdaq full margin. That's a good advice as well. Yes, that is a pretty good option. Just kidding. You should just withdraw the money, put it into trading education, and then try to put some money on the side. And I would say the best option would be to get an internship, get a job, or talk to someone in a bank or in a real prop firm. If you're in the finance field, it's not so tough to get a job at a real bank, at a real prop firm, if you have a good CV and if you have a good motivational letter, it can be easily done. And if you have zero capital, it is sort of the best way to start because they're going to teach you everything you need to know. They're going to give you capital, and then you will be trading millions and millions coming from essentially nothing, and you can get a big bonus if you have great performance. So if you're lacking capital, my best advice is spend the money you have on education and try to get a job in a financial institution that specializes in investing or trading. Really nice cigar. That is a good option as well. We're not getting jolts and NFP. No. Any glitch with Trade Locker? No, I haven't had any issues. So that is another thing I like with DNA Funded. They're using Trade Locker, which is, for me personally, from my experience, has been an awesome platform. Best platform so far to execute trades because it automatically calculates your risk. So you just put in 0.5% or 1% risk, and then you get sort of an automatic calculation of the lot size. Okay. While for MetaTrader, I have to spend like 5 minutes doing everything manually through a position sizing calculator. So MetaTrader sucks. Worst platform ever. I mean, it's super fast, But for swing trading, compared to Trade Locker, it's really bad. Trade Locker, awesome. I love it. Okay, advice from Ballout. For $200 every day, go to the coffee shop where all the rich people hang out and just order a cup of coffee every day for 60 days and try to network. Well, that's actually not bad advice. That's actually pretty smart. If you're open to it, of course, if you're an extrovert, maybe that could definitely work for you. But one thing I know is if you're just a random guy, there's not gonna be a lot of people interested in talking to you. So you have to have something that is interesting about you for people to be interested in you. Best thing to do is invest in education. It can be a course, it can be a degree, it can be an internship, right? If you're hungry enough, you're gonna get an internship. MetaTrader sucks. Don't trust anyone who uses it. MetaTrader is so simple because in order to be fast, you need to have a very, very simple interface. Okay, but it's just for retail traders. Like it's meant for retail traders and it's meant for retail to lose money. It's just not so good. To wrap up the stream, crypto is rebounding a bit today. So not a lot. I still think this looks bearish overall. We are now in the bearish part of the halving cycle, which is something I have talked about in the A1 Discord. So if you're in the A1 Discord, you will get the chart of the halving cycle. And we are now, as I mentioned, in the bearish part of the halving cycle. So be careful. It's a big confluence to sell. NASDAQ, I'm looking for buy setups. I'm looking to buy it at some cheaper levels. I'm looking for another taco trade, so another Trump trade, and then I would be a buyer. Right now we are actually getting a pullback, but I'm not sure I'll be getting in at this level. Let me see Edgefinder. Top setups, NASDAQ. Bullish. Okay, actually we're getting a bullish reading on the Edgefinder. That is interesting. That is good to see. So I will consider possibly getting in on a bullish trade here, maybe here. I think this is a great level. So we shall see. That is about it. Yes, 45% off sale happening now if you're interested. So contact a team member and you can get 45% off. What is your recommended trailing stop loss? My stop loss is still at the original place at 1.388 for this signal. If I move the stop loss, you will of course be notified in the A1 Discord. What I'm watching for is a bit of a pullback, break of the high, and then I can move my stop loss below this swing low. That is the game plan. That's about it. My time is up. I don't have anything else to share with you guys. I think I covered most of the stuff. You can catch me tomorrow. You can find me tomorrow at, let's see, tomorrow business stream. Tomorrow at, okay, so I still need to be put into here. But yeah, basically tomorrow I'll be streaming as well. You can catch me on the A1 stream. Thank you very much for watching. And congratulations to whoever got the challenge. See you. Goodbye.
Get over here. Come here. A little closer. Come here. Gotcha.
All right, guys, I'm back for services PMIs. We got about 10 minutes to go just to see what services PMI does here for this market. Numbers dropping in, let's see, where are we at? 10 minutes or so, we've got ISM services PMI numbers. Previously, they came in a little worse than expected. Let me just pull up my pin here. Previously, ISM services PMI came in at 50. We are forecasting today for a 50.7 reading. Really curious to see if we can beat that, exceed that, or if we're going to miss that. If we miss services PMI expectations, what does that do? Well, it actually does a lot, and it means a lot to me because it means a lot to my system. Specifically, we know services PMIs are an important indicator within the economy, and if services PMIs come in better than expected, what does that do to markets? Well, it would be US dollar and stocks positive, right? So if you're talking about if services PMI numbers beat expectations, meaning, oh, the economy is doing better than what we had predicted, or what the economists of the, Wall Street, geniuses out there, well, if they are predicting the economy to be this based on all the data they collect and scour through, and we actually get something reported that's better than that, then usually that will cause a positive impact in the US dollar as well as the stock market. Now, it's not that simple, but it adds into our calculus within Edgefinder that if you have better than expected PMI numbers, that's a good thing. However, if we flip it around, right, if we get PMI numbers that are worse than expected, then it does the opposite, right? So if you get worse than expected PMI numbers, services PMI specifically, that would cause bearishness to dollar and stocks. Sell or buy, we don't know yet. We don't know what the data is. Once we have the data, that's where exactly how we use it within Edgefinder is it will start implementing into the calculation of how our stuff scores. So if we go, for example, if you want a better understanding of how Top Setups works, Top Setups, the algorithm within Edgefinder, it has a column specifically for each of the major economic data points. Like today, we're hearing services PMI numbers. How that data falls will impact many of our charts. So for example, if we get better than expected services PMIs, the last time it came around, it was worse than expected. If today's number is better than expected, it will change our calculus a little bit for several charts that we watch. Specifically, let's say services PMIs, let's say that services PMIs actual, right, comes in greater than services PMIs expected. If that scenario happens, our system will then automatically change the scoring around to coincide with each of our assets. Does that make sense? I hope it does. If you're an Edgefinder user, I think it's important that you educate over time yourself how all of the calculations within Edgefinder work. It's not black box stuff. It's not magic. It is really simply a simple screening software that looks across many different economic data points and derives whether or not the economy and the prints that we're getting from the economy are worthy of bullishness, bearishness, etc. on different currency pairs, commodities, etc. So today we get services PMI numbers that will impact our scoring matrix. That's why I care so much about it. Now, the reason it impacts our scoring matrix, the reason it's on this list is because this list of economic data is a list of economic data that has a history of moving markets and impacting the state of the economy. If you have strong GDP growth numbers, that is strong for the economy. Manufacturing and services PMI numbers are forward-looking indicators of the US economy. Retail sales numbers are also important to get a read on how the consumer is spending. Inflation, we know how important inflation is, especially in recent years. It really impacts people and the economy. Employment data and interest rates. These are things that we track, not for fun, but because that's what drives markets. If you want to talk about, is gold fundamentally bullish or bearish? If you want to talk about, is the dollar going to advance higher or is it going to turn around and start moving lower? If you want to build an understanding of the wind in your sail, as I like to refer to it as, you need the economic data. That's what suggests whether or not the economy is in your favor on the trades that you're placing, especially if you're swinging position trading, or working against you. So that's why we're here. We're going to watch the services PMI number as it drops to see how it impacts things here in the U.S. economy. The final services PMI numbers dropped already. They were slightly worse than expected. And PMIs, again, like I said, they're quite important to the market. So the ISM services PMI, this is the one that we really care about. Previously, it missed expectations. We have 6 minutes to go until we get this data release. So in terms of which markets is this going to impact? The US dollar. It's going to impact commodities like gold, silver. It's going to impact the NASDAQ, the S&P 500, the Russell, the Dow Jones, etc. By the way, Russell making a little bit of a push here to the upside. Look at that. NASDAQ also pushing as well. This must have been some data point within here. Let me look at this. Latest PMI survey data from the S&P Global showed that the U.S. services sector registered a solid and accelerated pace of activity growth during October. Higher service sector output was accompanied by a firm rise in incoming new business, although an uncertain economic and political outlook. Moreover, selling price inflation was limited by competitive pressures, dropping to its lowest level since April, despite so a little bit of inflation positive news. So the stock market likes that. So we'll see. We have about 5 minutes to go here before we get the ISM services PMI number. We'll see if that also is a positive or if it is a negative. So we'll see. NASDAQ, for now, I've been talking about this morning. So far, we're trying to hold this area. Our full 3 areas that we've been discussing on the show. And I don't know, is anybody else's trading view doing this morning? Look at this. I don't know why it is doing this. I cannot get it to like stop changing my my levels here. It's throwing. It says I've got a take profit here on NASDAQ of 45,000. So if that hits, let me know, guys. I don't know why it's doing that though. It keeps like, watch, if I refresh the page, like I will save this template. If I reload the page even, it's still, maybe it'll stop doing it. But earlier it was like, okay, if I go to NASDAQ, you can see it puts my stop and take profit in really weird places. I don't know if anybody else is having that issue this morning. Anyways, the 4-hour chart level that we've talked about, the 3 levels, right, our general area of support. 1 didn't quite hold. 2 kind of held, but 3 seems to have held strongly for now. We'll see. But NASDAQ finding at least support, it seems, around the 25,000 level and bouncing back higher here this morning. Of course, like I said, services PMIs will potentially, especially if there's a big surprise, have significant indication of what NASDAQ, et cetera. Like services PMI is really important to the NAS. And we actually have, I don't want to get too far into this, but on our macro screener on the stock box, this is pretty cool stuff. We've actually weighted how important each one of these things are to different sectors. So I like to trade sectors. Like I'm long XLY right now because XLY is one of the top performing sectors in terms of how the macro is falling, in terms of stock box scoring. So consumer discretionary, XLY, I'm long XLY, which has been so far a pretty good trade. So I'm still long XLY. I bought XLY on the daily when we pulled back. This is consumer discretionary stocks. So these are, you know, opt-in spending like Amazon, Nike, Netflix. Actually, I don't think Netflix is a consumer discretionary. I think it's comm services, but same kind of concept. It's discretionary spending. Anyways, I'm also long the Russell. So we'll see. But this data is dropping in just a second. We have services PMIs lining up in 1 minute and 30 seconds. We'll see if that does anything to markets. It may or may not. Hey, Eric, thank you very much for the kind words, my friend. Appreciate that. Is there a search button on Edge Finder? Yes. If you're like talking about, I want to look at a specific chart, just head over to the market scanner and you can search for whatever you want. So if you want to look at gold, if you want to look at, you know, I don't know, NAS, like you can search your favorite in the AI market scanner page, like NASDAQ still getting a strong reading, etc. ADP numbers came in nice earlier today. Services PMIs. Yeah, it depends. We'll see what we get. We've got 40 seconds to go. Let me go ahead and just switch over here so we can watch a couple charts. What happens next here with we've got everything on the screen here. We've got stocks here, these three, Bitcoin here, dollar, gold, silver, and oil all on the screen right now. We got about 20 seconds to go here before we get services PMI numbers. Let's see how that impacts our charts. Got about 10 seconds to go. All right, initial reaction here seems somewhat strong from the dollar. Let's see what we get. There it is, better than expected. Services PMI came in 52.4. That is going to keep me bullish on a couple things. It's going to keep me bullish on stocks. It's going to keep me bullish on, like, that's a strong read for the economy. I'll take that. Strong read for the dollar. Strong read for stocks. Very nice. Very good read. Yeah. So like he says, that's a good read. That is definitely a good read. Now, again, we'll see what if that can kind of push us through. But look at that dollar move. We are trying here. DXY is trying to break through this 100 level. I'd say if you can get a solid breakthrough these highs, like for example, if you get this kind of move, like up to 101, that kind of move just looks really strong. Nick, you're the, if not the greatest teacher of all time. I respect you and will forever invest my time here all the way from South Africa, man. Thank you very much for the kind words. I really appreciate that. I'm glad you're learning something. You know, the thing is, I don't really view myself on like my channel. Like I don't perceive myself as a teacher or a mentor. I'm not here. I don't claim to be here to teach other people how to trade. My, kind of thing on my channel is I'm actually trading. I'm just doing this and sharing my journey. I enjoy making content about it, but my primary goal with the channel is just to genuinely share what I'm doing, what I'm trading, why I'm trading it. And if you learn something, amazing. But my goal isn't to like step-by-step teach you how to do things and, But I guess, one of the best ways to learn something is to learn through experience and by example. And so hopefully by watching, you're like seeing some of my mistakes get made over the years, if you've watched for a long time, etc. Yeah, so this is going to stay bullish for NASDAQ. In terms of our scoring, we just got done discussing, if you were here just a few minutes ago, we were talking about how services PMIs, the reason it will matter is because once this updates, services PMIs are going to come in nice and strong for US stocks. So that's going to flip some, like you're going to see pretty soon, all of our stock indices are going to get more bullish within the Edge Finder. Why? Services PMIs were better than expected. That is a strong reading for the US economy. If you're a macro trader, this stuff, you've got to have this stuff on lock. Like you got to be able to, okay, services PMI is better than expected. What does that do to the dollar? What does that do to gold? What does that do to stocks? Speaking of gold, did that do anything to gold? Let's see. A little bit of softness out of the gold push, not really very much. But I do think that what this does is it continues to support a stronger dollar and it continues to support up moves in stocks, in my personal view. That doesn't guarantee that we're going to go right through the highs. That's not how that works. It just, to me, tells me like generally I'm going to stay favorable to upside in stocks. On dips, I am a buyer of dips until proven otherwise. If price action can't hold these areas of support, if we start flooding through the lows here today, I'm going to take profits on this move. But I'd be looking for price action to set up another bullish setup because, again, I think the macro generally favors more upside for stocks. We go back to our AI market scanner, take a look at NASDAQ. Why is this? And again, this will go more positive in just a few minutes once this updates. Software is running on timers, so it's pulling data on a frequent basis, but it's not quite real time, but it's pretty quick. So it'll be updated pretty soon. ISM services PMIs will flip to bullish. And so what you'll have here is a really strong picture for NASDAQ bullishness. Seasonality still looks good. End of year rally is a historically acknowledgeable thing that happens in markets. It's not a guarantee. Nothing ever is. All we do is we stack odds in our favor as traders. 4-hour and daily chart trend clearly still in the upward direction. Our moving averages, we have the 50-day, 100-day, 200-day, all pointed in the upward direction. Price is trending above it. However, it looks like we might have lost we've got to be real close on NASDAQ. We got to be real close to the 20-day moving average. Yeah. You can see we're on Qs, we are still above it. On NAS 100, are we below it? Nope, we were, but have bounced back. So once that updates, we're probably back in bull territory once this updates here. So yeah, I mean, to me, you can get fancy and you can watch all the stuff all over social media about how the US economy is going to go to zero and everything's a bubble and we're going to crash. And you might be right. The problem is you might be right 5 years from now after the market triples. So that's the difficulty in trading. It's all about timing. So if you're somebody who said, dollar index down, US going to crash, NASDAQ, you might be right in the end. But what if before you're right in terms of thinking, oh, we're going to get some downside. Let's say you think we're going to get a 10% correction or a 20% correction in the NASDAQ. Well, if you thought that over here, like if you thought we're going to go down 20% or you thought you're going to go 20% down further, the problem is even if you get a 20% down move here, you're still above those April lows, right? So that's the problem with timing, is that if you're just bearish for the sake of being bearish and the market is just telling you you're wrong and you're ignoring it, even if you do end up being right about a 20% drop in the stock market, what if we do this first? What if we go up for another couple months and then we get a 20%? Let's say we make a move over the next few months to 29,000 on the NASDAQ. And then you finally are right. We got that 20% drop you've been calling for. 20% would bring us back just to right around a little bit lower than where we're trading right now, around 23,000. And in the meantime, what would happen to you is if you're short, you'd be getting crushed on your shorts. And if you're leveraged, you'd probably blow up, right? So this is where you have to be really careful. Timing is important in trading because you can't just say market's going to crash, market's going to crash. Sure, eventually, yeah, the market will crash, but are you going to get destroyed before the crash actually happens? That is why timing in trading is really important. Nick, what are your opinions on NVIDIA and the Palantir puts? Talking about the Dr. Burry's bearish outlook on these things. Look, I actually really respect the guy. Michael Burry he's a beast. They made a movie about the man, okay? They haven't made a movie about me, so I can't talk too much trash. There's reasons to be really cautious about the AI stuff. I don't like when I give you this rant about like, oh, perma bears, like what is going on? Anybody else's trading view doing this? Like what is going on with my is anybody else seeing this? Like every time I go back to this chart, my levels on my long position tool are just completely whack. I don't know why. My stop loss, look, I've had big stop losses before, but I've never put on a stop loss quite that big. Anyways, when it comes to Michael Burry's bearishness on the markets, he actually put out a couple of things. Like I see everybody like dogging on him, like, oh, he said sell. Well, Michael Burry has outperformed the S&P 500 the last few years. Like he's done actually pretty well. And so, people love to hate on people who make a call, but most people are too afraid to make calls. So if he thinks Nvidia and Palantir have downside moves, hey, respect to him for being transparent about it. Most people are too scared to do that. Most people, in terms of social media, they'll talk out both sides. Right? What I mean by that is they'll say, oh, NASDAQ could go up, could go down, right? So somebody who is saying, I think this, and here's my positions, you'll never catch me like just absolutely dogging those people because it's hard to do. Like it's punishing. It's pretty devastating when you're wrong publicly. And so like I've done that. I know how that feels. It's not easy to stake a claim and to be brave and to make a point. And there is reason to think AI stocks, a lot of them are really, really, really expensive. Like you will not catch me buying Palantir at these levels. It's too expensive. I understand the caution to not chasing AI stocks. Now, I'm still long the NASDAQ. I'm trailing stops on the NASDAQ. Like I still think there is upside in the NASDAQ, but I'm not leveraged and I'm not willing to make an incredible all-in bet. So I wouldn't short Nvidia and Palantir. I'm not as bearish as he is. But I respect the bravery to, put out your opinions. You placed it in September, if I'm not wrong. I think you're right, but also the 13F filings, like he could have closed out since then, I believe. I believe that's how that works. He also put out another tweet I saw where he basically said, I'm not short. And did you guys see that? He put out like a cryptic message that basically said, I'm not short. And then he also said, sometimes in a bubble, there's a time to be long, there's time to be short, and there's a time to sit out, kind of indicating that he's thinking there's a bubble, but kind of sitting out of the play. And I think that's a perfectly prudent thing to do when you have, a market that's just gone straight up. Look, I'm long, I'm trading it long. I'm not investing up here heavily. I'm not leveraging, etc. Anyways, guys, we got to wrap up the show here. Last thing I'll do is remember, Edgefinder is currently on super sale right now. We're doing our Black Friday discounts. We've got 45% off the Edgefinder, the Stock Box, our VIP signals. If you've ever thought about getting access to any of our premium products, look, the reason we offer premium products is because, again, first of all, we've built a tool that I think traders all around the world are using for a reason. We help traders to better analyze macro fundamental analysis and market sentiment tools. With our tools, you can scan with AI as well as our internal algorithm, things like technical readings, institutional activity, sentiment data, inflation data, jobs market signals. So if you're like, I understand that fundamentals are important, but they are very confusing, then don't worry, you are not alone. That's why a lot of people use Edgefinder. It's why I use Edgefinder. It's too much stuff to do in my head. So we have tools that help to track this stuff. You can track GDP growth. You can track services PMIs. You can track manufacturing PMIs. You can track seasonality to track historical seasonal patterns of charts that you're watching. Like, for example, part of the reason I'm bullish right now is because I still think there's room for the indices to squeeze higher into year's end, according to data showing historically that is what typically happens in the last 10 years. All of it is being generated into a top setups algorithm. So it's looking at all the data for us to build an idea on each of these assets. We also have institutional data, so you can track what big money is doing, what they're buying, what they're selling through the Commitment of Traders report. We have market sentiment indicators. So if you want to look at the crowd sentiment through the options flow volume, if you want to look at the put to call ratio, if you want to look at the weekly AAII investor sentiment survey, all of these tools are at your fingertips, and all of them are 45% off right now. It is the biggest discount that we do all year long. If you want information, scan the QR code below my camera or hit the link that just got dropped in the chat to speak directly to a member of our support staff here at A1, and we can get you set up. We also do offer a payment plan model. If you can't pay the full thing today, split it into 2 payments. We can do that for you. Just send us a message. Let the support team know you are watching today's show and you're interested in Edgefinder or Stockbox or VIP group, and we can help you out with that. Thanks very much, guys, for tuning in today. Thanks, and we'll see you back tomorrow.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.